Good evening. Ira Epstein, and here we are with your metal market update. And this update is for the evening of Tuesday, and we're at the 6th of August, 2024, just getting out of 6:15 p.m. Central Time. So it was a day that I expected a bounce in many markets. I had yesterday talked to you about the factor that the stock market was so far down, it pulled everything with it. And when you get big moves on a Monday, especially in the financial market of the stock market, that's the primary one. Big moves down often get small corrections or bigger corrections on a Tuesday, but that's often what occurs. And you can parlay that over, does it occur in metals? Not as much. Okay, I don't use the rule there. I really use it in this market. I don't use it in the currencies per se. But yesterday's type of break probably carried into everything. And you even tried to rally and did rally into the energy markets and the like. And I'll cover that in the financial markets. Right now, what I want you to look at is the Mortgage Bankers Association will come out at 6 in the morning with their numbers, and then right after that we'll get new mortgage resets from Freddie Mac, and we'll see just what that's all going to be. The Federal Reserve June Consumer Credit Data Report comes out at 2 o'clock. They're looking for credit expansion this time of $9.7 billion compared to the June number. EIA petroleum stocks will be out at 9:30 in the morning. And we just got, in the evening, the API numbers, and that's why energies, I think, are down. You had a build in these three numbers. All right. This is what you call a churn market. Learn the term, play with the term, and understand what you've got. You have a market in a transition in the stock market. It's rolled itself over into the metal markets to a degree, and the markets are going from a booming U.S. economy to questions: are we weakening? How much are we weakening? Is this going to last a long time? All those questions. And as the dollar has strengthened and you've got falling interest rates instead of rising ones, that's offering a headwind to gold because it makes gold more expensive. Does that make sense? I hope it does to a lot of you. When we look at the gold market, if it's going to break here, I wouldn't be surprised then that you go for the 18-week average of closes in red, the 2364 level. That's if you get the break. In order for it not to break, you got to start clearing these highs. And I told you we have a quadruple, you could argue it, 1, 2, 3, a quadruple top working right now into a resistance area on a close-only chart. When I come to the daily chart, you're at a precarious time. Now, let me explain this. You can almost see here the whip down, the whip back up, back down, and now what are we doing? This was the big break, as you know, on Monday. So when you put a swing line on it, the pattern of the chart is higher lows, higher highs. You can see these two spike highs, and 2403.80 is higher than 2398 in a fraction here. If this number is taken out, it will revert to lower highs, lower lows, and that will be the bearish part of the market, all right? It can't afford, in plain English, to get under 2403.80. If it gets under that, you'd be underneath the 100-day average as well, and the Bollinger Band is coming in right here at 2396.60. So you're at a very interesting spot right here. Now, if you crack down and you stay under the Bollinger Band, the odds of staying it are only 5% of the time. But the market, if it wants to really let loose, would it be able to get to the big average here, which is the 200-day average? When we take a look at the slow stochastics, momentum is pointing down. The trend is up as defined by the swing line with higher lows, higher highs, but the bias is down as the market is under the 18-day average. The chart is a mess. It's in a precarious position. Sell signals coming against two big support numbers if they're hit, the 100-day average and the Bollinger Band. I don't know what to do with it at that point. In the gold-silver ratio, you're reaching for the stars again as you're up to 88.71, attacking this zone where you failed before. So we'll find out if gold's going to start losing the silver on that. The silver market is oversold with its slow stochastics, but trying to embed. The pattern has been bearish. It's lower highs, lower lows. Each time it's now been rallying back, and you could see that to the 100-day average, it gets thrown down. And now the bigger support waits for the market at 2659.80, which is the 200-day moving average of closes and the lower Bollinger Band. Again, if you take a look at the slow stochastics, while both numbers tonight are sitting here under 20, they were that way on Tuesday's trade, but not that way on Monday. So you have another day to go if you're going to embed. Right now, you're just plain oversold. Copper can't get out of the way of its weight, and that's not said lightly by me. Lower highs, lower lows, it is still very bearish. I said you got to keep your eyes. Is the 18-day average going to get under the 200? And that could be another bearish thrust. Well, tonight with the prices, you're not quite there, but if copper doesn't pick up soon, it will see that happen. In the platinum market, you have no trend. You have a higher high and a lower low, very similar to gold, but the bias is down and you're oversold. Again, one of these charts that to me doesn't make a lot of sense to do anything. And in the dollar index, all you're trying to do is get back to the Bollinger Band, which is not a bullish scenario. Markets only stay under that band 5% of the time. You finish right on it for all purposes. So, today's, 2 days under it, I'll call that day at it. But look at all the resistance building and look at the big resistance coming here with the 18-day average challenging the 200. Again, that we saw that pattern before. So on big rallies, I see problems in this market, and I think the market stays under pressure right now. So where do you go with all this that you're looking at? Well, when I talk these terms, if you don't get them, we have our guide to technical indicators, volumes 1 and 2. We did these with our good friends from Futures Magazine many years ago. And in color, you'll see the different chart patterns. Everything's got examples laid out. Folks, when I tell you this is something that you should print out, you keep on your desk if you're a new trader and you want to learn how the oscillators, slow stochastic, RSI, MACD, what's the difference? Some traders still look at market sentiment. I hear it mentioned on the floor often. I've seen Rick Santelli talking about it. Elliott wave, Gann theories, they're all in here, all those type of understanding at least of them. And then the Arun indicator that I like to use, and we have a free course on it for you, and I think you'd find that to be interesting as can be. So money management. You're nowhere if you don't learn how to work with the money in your account because it's finite. You can't just buy it, oh, it's going against me, I don't care. Can't play that game. You have to have a game plan, and money management is part of it. Just go to IraEpstein.com, free offers, and move your cursor to the top here. It'll take you there, and you'll see the free offer page. Give it a click, and away you go. It's a basket in there. Just choose what you want. It goes right into the basket, and we'll get everything out to you. I'm Ira. Have yourself a great evening, and I will talk to you first thing in the morning.